Cryptocurrencies have become an increasingly popular topic of discussion in recent years. With the rise of Bitcoin and other digital currencies, the world of finance is rapidly changing. Cryptocurrency trading can be intimidating for those who are new to the world of digital currencies, but with the right knowledge, anyone can start trading successfully. Hello, welcome to our channel. In this video, we will take a look at the basics of cryptocurrency trading, including what it is, how it works, and what you need to get started. We will also provide some tips and tricks to help you succeed in the ever-changing world of cryptocurrency trading in 2023 and beyond. Whether you are looking to invest in Bitcoin or other digital currencies or simply want to learn more about this exciting new world of finance, this guide is everything you need to get started. Kindly stay tuned, like the video, subscribe, share and make a comment in the comment section. Do not forget to hit the notification bell to get notified whenever we upload a new video. Introduction to cryptocurrency trading. Cryptocurrency trading involves buying, selling, and exchanging digital currencies using online platforms known as cryptocurrency exchanges. Unlike traditional stock markets, cryptocurrencies operate on decentralized networks called blockchains, which provide transparency, security, and immutability to transactions. 1. Understanding the basics of blockchain technology. At its core, a blockchain is a digital ledger that records and verifies transactions across multiple computers, known as nodes. This decentralized nature ensures transparency, security, and immutability of the data stored within the blockchain. Unlike traditional centralized systems, where a single entity has control over the data, blockchain allows for a trustless and tamper-proof system. The blockchain consists of blocks, each containing a set of transactions. These blocks are linked together in a chronological order, creating a chain of information. Each block contains a unique identifier, a timestamp, and a reference to the previous block, which ensures the integrity and continuity of the blockchain. 2. Common types of cryptocurrencies. 1. Bitcoin, BTC, undoubtedly the most well-known cryptocurrency. Bitcoin was the pioneer of the digital currency revolution. Created by an anonymous person or group of people using the pseudonym Satoshi Nakamoto, Bitcoin operates on a decentralized network known as blockchain. It has established itself as the gold standard of cryptocurrencies and remains a popular choice for both investors and traders. 2. Ethereum, ETH, considered the second largest cryptocurrency by market capitalization. Ethereum is more than just a digital currency. It is a decentralized platform that enables the creation of smart contracts and decentralized applications, dApps. Ethereum's native currency, Ether, is used to facilitate transactions and power the network. 3. Ripple, XRP. Ripple aims to revolutionize the traditional financial system by enabling fast and cost-effective international money transfers. Unlike Bitcoin and Ethereum, Ripple does not rely on mining. Instead, it uses a consensus algorithm to validate transactions, making it a popular choice for banks and financial institutions. 4. Litecoin, LTC, created by Charlie Lee, a former Google engineer. Litecoin is often referred to as the silver to Bitcoin's gold. It was designed to offer faster transaction confirmation times and a different hashing algorithm, making it more accessible for everyday transactions. 5. Cardano, ADA, built on a scientific philosophy and peer-reviewed research, Cardano is a blockchain platform that aims to provide secure and scalable infrastructure for the development of decentralized applications. It utilizes a unique proof-of-stake consensus algorithm called Ouroboros. These are just a few examples of the wide variety of cryptocurrencies available in the market. Each cryptocurrency has its own unique features, use cases, and potential for growth. As a beginner, it's essential to familiarize yourself with these common types of cryptocurrencies and conduct thorough research before making any investment decisions. 3. Choosing a reliable cryptocurrency exchange. When selecting a cryptocurrency exchange, there are several factors to consider. First and foremost, you want to ensure that the exchange has a strong reputation and a proven track record of security. Look for exchanges that employ robust security measures such as two-factor authentication, cold storage for funds, and regular security audits. Another important aspect to consider is the range of cryptocurrencies offered by the exchange. Different exchanges support various cryptocurrencies, so it's essential to choose one that offers the coins you are interested in trading. Additionally, consider the liquidity of the exchange, as higher liquidity enables faster and smoother trading experiences. 4. Setting up a cryptocurrency wallet. There are several types of cryptocurrency wallets available, each with its own unique features and levels of security. The two main categories are hardware wallets and software wallets. Hardware wallets are physical devices that store your private keys offline, providing an extra layer of security against online threats. These wallets are typically USB-like devices that you can connect to your computer or mobile device when you need to access your funds. They are considered one of the safest options as they keep your private keys away from potential hackers. Software wallets, on the other hand, are digital applications or online platforms that you can download or access through a web browser. They are convenient and easily accessible as you can manage your funds from your computer or smartphone. However, since they are connected to the internet, they may be more susceptible to hacking attempts compared to hardware wallets. 5. Managing risks and setting stop-loss orders. A stop-loss order is an instruction given to a trading platform to automatically sell a specified amount of a cryptocurrency when its price reaches a predetermined level. This level is set below the current market price to limit potential losses in case the market suddenly turns against your position. By setting a stop-loss order, you can minimize the impact of sudden price drops and protect your capital. It's important to determine the appropriate level for your stop-loss order based on your risk tolerance and trading strategy. Some traders prefer to set their stop-loss orders at a fixed percentage below their entry price, while others may use technical indicators or support levels to determine their stop-loss levels. 6. Tips for successful crypto trading. 1. Educate yourself. Before diving into crypto trading, take the time to understand the underlying technology, market trends, and terminology. Familiarize yourself with different cryptocurrencies and their unique features. This knowledge will empower you to make informed decisions and minimize the risk of making costly mistakes. 2. Set realistic goals. Define your trading goals and establish a clear strategy. Determine how much time and capital you are willing to invest and establish your risk tolerance. Setting realistic goals will help you stay focused and avoid impulsive trading decisions based on emotions. 3. Start small. As a beginner, it's wise to start with a small investment. This allows you to gain practical experience and learn from any mistakes without risking substantial losses. Gradually increase your investment as you become more comfortable and confident in your trading abilities. 4. Stay updated. The cryptocurrency market is highly dynamic and can be influenced by numerous factors, including regulatory changes, technological advancements, and market sentiment. Stay updated with the latest news, market trends, and expert opinions. This information will help you make well-informed decisions and adapt your trading strategy accordingly. 5. Utilize stop-loss orders. Crypto markets can be volatile, and prices can fluctuate rapidly. To protect your investments, consider using stop-loss orders. These orders automatically sell your assets if they reach a predetermined price, limiting potential losses in case of a sudden market downturn. 6. Practice risk management. Implementing risk management strategies is crucial in crypto trading. Diversify your portfolio across different cryptocurrencies to spread the risk. Additionally, consider setting a maximum percentage of your capital to risk on each trade, allowing you to preserve your investment even in the face of potential losses. 7. Embrace continuous learning. The crypto market is constantly evolving, and successful traders adapt along with it. Continuously educate yourself, attend conferences, join online communities, and engage with experienced traders. This ongoing learning process will enhance your trading skills and keep you up to date with the latest trends and strategies. Remember, successful crypto trading requires patience, discipline, and a willingness to learn from both successes and failures. By following these tips and dedicating yourself to continuous improvement, you can navigate the crypto market with confidence and increase your chances of achieving long-term success. Do not forget to like, subscribe, share and comment for next content like this. We hope you found our beginner's video to crypto trading helpful for navigating the exciting world of cryptocurrency in 2023 and beyond. As the crypto market continues to evolve and gain momentum, it's important to stay informed and educated. By following the tips and strategies outlined in this video, you'll be well on your way to becoming a knowledgeable and successful crypto trader. Remember to always do your own research, stay updated with the latest market trends, and manage your risks wisely. Happy trading and may your crypto ventures be prosperous.